Hi everyone, welcome to today's video. So if you open up any news channel right now, you will see a lot of negative commentary that that Russia is killing Ukraine, oil prices are going to go up, your neighbor is going to take your scooter and run away. So basically, if you hear the commentary of any investor right now, they are simply trying to build a narrative that everything is negative, the entire stock market is going to go to dust. We are going to do a rational analysis today backed by some numbers, data, and look at specific commentary that is coming out. Very important video from the simple point of view that right now, if you are a beginner in the stock market, you will get super scared by this situation. So I will structure this video into 4 specific parts. One, we will look at big investor commentary. What are they saying about the markets today and why they are painting this narrative of bear run, that bull run has ended, bear run has started. That's one. Second, we are going to analyze the current scenario and make a call whether the bull run has actually ended or not. Third, we are going to take a look at some critical reasons as to why the markets are falling and how worried should you be with all these reasons. Fourth and finally, I will give you my verdict, what I am doing. This is not an investment advice, but hopefully after this video, you will have your nerves little bit calmed down. So with that perspective, let us start the analysis. So let me show you this chart, which is market mood indicator from Tickertape. So essentially this ticker tells you that how fearful or greedy people are while acting in the markets right now. So you can clearly see that people are fearful right now. And when people are fearful, you should be buying stuff, not selling stuff. But you will say, I'm reading newspaper, I'm watching news, I'm following Vladimir Putin on Twitter. So these people are scaring me. What should I be doing? And should I be selling everything? So let us first and foremost understand the commentary and viewpoint of big investors like Mr. Shankar Sharma. And here is a small clip for you.
3 long years. And by the way, there's an interesting thing I want to share with you guys that back in, I think, April or May of last year, we were running the data and the numbers and the analytics, and a simple 2-minute metric that how many years in a 100-year period do markets go up consecutively. Okay. Now the data is very interesting that after 2 up years, the third year is only a 50-50 probability of being up. Okay, now that's normal. There's no great insight in that. It's a toss of coin. But if there are 3 consecutive up years, okay, and I'm not talking plus 1%, I mean a significant like a plus 5, plus 8, plus 10, then the 4th year is almost a given is going to be a down year. The probability of a 4th up year in a row is virtually 0. That's the long-term data. So when I saw this data in April or May last year, I said...
So the viewpoint that he has presented is very negative, no doubt about that. One central point that he has mentioned is, if you take 4 consecutive years, then the market has not gone up. On year basis, the probability of that happening is close to 0. Now, if you hear such commentary, you will get intrigued and also you will get super scared and you will sell your stocks. Should you be doing it? And is this data correct? So the answer is no. This data is not correct, not even remotely. So let me show you the correct data. For example, if you take a look at the longest bull runs in the history of stock market, this is what you will see. 1. Great expansion. This lasted for 114 months. 4 years is 48 months. So from that particular perspective, this is much longer than 4 years. So bull runs can continue up to 8, 9, 10 years also, right? Same goes for post-crisis bull run. This was a period between 2009 to 18. This again was 112-month period, so fairly long period. Now same goes for post-war boom, right? So this is slightly older, not very relevant data, but still let us quickly go through it. So this was 49 to 56, 74 to 80. Then 82 to 87, then 2002 to 2007, there was a 60-month bull run. Are big investors deliberately misleading you? I don't know, but their interpretations could be fairly open-ended. For example, bull run means a general upward trending market that lasts for certain years. Now, within this bull run, there can be small corrections that happen or even slightly deep corrections. For example, 15%, 20% corrections are very normal and there is nothing to be scared about as long as that bull run story is intact. Now, let us analyze the data for the latest 3 bull runs that have happened. Now, the first bull run happened here, the second bull run happened here, and third bull run happened here, right? Now, what would you observe? The first thing you will observe is between 1990 and 2000, this was a bull run period and stock markets gave a lot of returns. And post 2000, which was the dot-com bubble burst, the stock markets corrected quite a lot and this was the end of the bull run. Then second bull run lasted from approximately 2001 to 2008. And again, 5-6 year period, good money made. Then in 2008, we had a crisis and this bull run also ended. Then came the third bull run. And third bull run continued up until when? 2020. So the point I'm trying to tell you is that the bull run recently ended. It's not as if that we are continuing that 2009 onward bull run. So when people tell you this story that, you know what, bull run has ended, this, that. No, the bull run has started. Yes, there is short-term pain that is going on in the market, but this does not mean that the bull run has ended. Now let me try to prove this point by taking you to the Nifty 5-year chart. So what you will see, the first and foremost thing that you should focus on is the returns for 5 years. It has been 93.39% in a 5-year window. Are these great returns? The answer is absolutely not. That in the last 5 years, the market unfortunately has not given very high returns. 100% return in 5 years is not massive. In 5 years, your money should double. In CAGR terms, this is not even 15% yearly growth. The second key point that I want you to notice from this graph is this, that this was the end of the bull run period in 2020. After this, it went up and it is sideways consolidating. There is no bear run that is happening even now. There is small correction that has happened and there is sideways movement. Yes, going forward, the markets might correct by another 15%. Who knows? No one can guarantee. But is this thing intact? The answer is yes. I would be very surprised if there is recession on card or if there is 50-60 correction that happens in next few months or even in couple of years. Now, can I guarantee that? Absolutely not. I cannot do it. But by looking at the data, facts, I can conclude that this is not the end of the bull run. It is just the starting. Yes, the markets have run up quite a lot. No doubt about that. So we might sideways consolidate. This is the same thing that I've been saying over and over. But this is definitely not the end of the bull run. Now, before I move on to the next section, I want to show you something mathematically, right? Which was this 95% return in the last 5 years, as I showed you from the Nifty chart. What does this mean? If you apply the rule of 72, please comment what rule of 72 is. I have taught that on my channel several times. So if you divide 72 by 15, it comes out to be 4.5 years, right? So what this proves is that in the last 5 years, the CAGR, compounded annual growth rate, has been less than 15%. So if we are saying that, hey, you know what, the market is in massive run up, no, it is not in massive run up anymore. It has already deflated quite a lot. Can it go down further? Of course it can go down further, no doubt about that. But saying right now that the markets are overvalued, no, that is not correct. Now you would say that, Akshat, you know what? I have been hearing like so many commentaries. The oil prices are going high. There is like Ukraine-Russia issue that is flaring up. So what do you have to say? And even I heard today that NSE is into some scam. So all these things are going to drag the market. Do you not agree? Yes, in the short term, these things might drag the market a little bit lower, but let us try to break apart and understand these basic things in a very easy to understand language. So let's first and foremost talk about oil prices. People are giving really weird commentary on this, that, you know what, that oil prices are skyrocketing and that will decelerate growth in India and therefore a bear run will happen and therefore the economy will crash, the growth will slow down, this, that. So let's analyze the historic oil prices and look at the correlation between increasing oil prices and the fall in market. So you can draw a rough conclusion that, for example, so in 2000, there was a spike in the oil prices and just during that time, the market crashed. Same in 2008, that the oil prices peaked here and there was a crash. Same, almost the same situation played out here, that there was a sudden spike in the oil prices. Now in 2020, this scenario did not play out because it was a pandemic or a healthcare based issue that impacted the world market, not an overheating of the economy issue. But now the argument is being made that, hey, you know what, just like in 2008, we are sitting in 2022 and again the oil prices are creeping up. Now the word of the day today is creeping up. So let me know what does that mean. So oil prices are creeping up, and as the oil prices continue to climb, that will lead to recession, a crash, and bad things are going to happen. So here are a couple of points regarding this. So number one, right now the oil prices have spiked because of Russia-Ukraine crisis. It's a supply chain oriented crisis and therefore the oil prices have gone up. There is nothing wrong with that and it's not alarmingly high. For example, if you take a look at the chart, it is at $88 a barrel in Jan. And I checked the Brent crude oil prices today, it was roughly at $94 a barrel. Now, if you go back to 2008, the oil prices were $165 a barrel. So it was very high. Right now, no such scenario is being played. And this is not a very strong correlation that the oil price increase necessarily will bring a slowdown in the economy. There is not a strong correlation there. And therefore, there is nothing to be scared about regarding oil prices. Now comes the next point, Russia-Ukraine war. Now, okay, I have made a separate video on Russia-Ukraine. You can go and watch it. I have given my analysis, but I'll be brief and I'll explain this to you in very easy to understand language. In 2014, Russia annexed Crimea and there was temporary impact on the stock market, especially the Russian stock market. And after that, the world stock market rebounds very, very quickly and started giving excessive growth. I showed you that bull run history. This Crimea's annexation by Russia was again a blip in that bull run story. All these geopolitical tensions keep on surfacing some place or the other. Do you know how many countries China has been fighting with? It has territorial disputes with 17 countries. Every now and then in South China Sea, China keeps on flaring and creating more ruckus. China keeps on strong arming small nations. That keeps on happening. Unfortunately or fortunately, for the last couple of years, China got super busy with this COVID handling problem after eating so many bats and whatnot. So therefore, they are taking it easy a little bit. In 2 years, again, they will start creating nuisance for a lot of countries. Bottom line, however, is that big countries, unfortunately, do not care about small countries like Taiwan or small countries like Tibet or small countries like Ukraine. It does not matter to them. They will go back to their own homes and start handling their own crisis. There will be no long-term trade sanctions or stopping of business with Russia for this particular perspective. So the business will go on. There is absolutely no doubt about that. Now, the third reason that people keep on pointing that we will hit a recession is because inflation has gone out of control and there is no way that the governments are going to control it. No, they are going to control it. They have infinite money printing power, so to say, and they can keep on raising their debt. That's the dance that they keep on doing, and they have been doing it for the last 1.5 decades. And we saw one of the biggest bull runs in the history of the market from 2009 to 2020 onwards because of the exact quantitative easing dynamics. Having said this, yes, there are short-term pains in terms of inflation, no doubt about that. Inflation has gone haywire. It is creating nuisance for the economy, no doubt about that. But the world cannot afford not to grow. So if you're taking a 5-year perspective on the market, it seems like that there is no reason for you to be bearish about this market. Please be bullish, otherwise you might end up losing a lot of money. So this brings us to the final section. What are some of the key things that I will recommend and what are some of the key things that I myself am implementing? Number one, I am following contrarianism. What it simply means is that if people or big investors are giving negative commentary, I'm going to go and do the opposite. Simply means that if people are being super bearish and giving a lot of gyan that, you know what, this crash will happen, this, that, I'm going to do the complete opposite, looking at this market mood indicator, and I'm going to take opposite positions. That is my strategy number one. Number two, in the short term to mid term, my goal is to invest majority of my money in companies that are likely to survive a challenging phase for maybe a year and a half. So here I am taking positions in cash rich companies and some very strong businesses. So from time to time, I will keep on making more videos and I will keep you aware about this situation. Third and finally, I am avoiding story based firms, especially IPO based businesses. Does it mean that I'm not going to do any tech investments? No, I'm doing all my tech investments in the US and in the crypto space right now. I'm not buying even one single stock in Indian tech companies as of now, for the simple reason that it's much easier to track tech oriented stories in the US or in the crypto world compared to Indian stock markets where there is less reliable information. For example, if you check the valuation of a lot of IPOs in India, tech IPOs that I have made so many videos on, and I deliberately ask people not to invest in them, they have been cut like anything in the market right now. They have lost a lot of their valuation. So there is no point in me putting my money in these type of assets. Even this year, there are a lot of companies that are going to launch their IPOs. So please be very, very careful and picky in terms of what IPOs you are going to invest in. I hope you enjoyed the video. Please give it a thumbs up. That will help a lot. And I will see you tomorrow.